It's interest rate cuts which are going to dominate the rest of the outlook for the year. It is difficult to overstate the importance of what the US Federal Reserve communicated last week. Inflation in the US has been above target for around about 55 months, and it looks set to remain there for the next year at least. But despite that, interest rates were lowered by 100 basis points last year, and the Federal Reserve have begun another cycle of interest rate cuts. Normally, policymakers in the US try to balance both inflation and unemployment. These two economic variables are interlinked, particularly as the economy slows. And that's what we've seen in the jobs cycle since tariffs were implemented in the spring. In June, there was actually negative job creation, and there was almost no jobs created in both May and in August. And this is what's worrying the US Federal Reserve. History tells us that when the US economy slows such that job creation turns negative, then a recession typically follows. And that is why, with one eye on the White House and one eye on history, the Federal Reserve have begun to lower interest rates again and communicated that further cuts are coming. But of course, all this is happening with the stock markets at all-time highs. So this is great for multi-asset portfolios. Lower interest rates anchors bonds, and higher equity prices dominates the outlook for balanced portfolios. But what about the rest of the world this week? Well, it's activity data for continental Europe, including the UK. Now, the activity data for Europe has signalled that the economy there is largely in recession, so any upside surprise in the data will be most welcome. Perversely, the data in the UK has indicated that we have a bit of an economic boom in services, but of course we know that the reality is somewhat different. So these data sets are signalling somewhat mixed data for us. Of course, we also get US core inflation at the end of the week, but with what the Federal Reserve has signalled that it's looking through this short-term strength in inflation, it's likely to be ignored by markets as they look towards the end of October and the beginning of November for the next Federal Reserve meeting. So that's all for this week, but please do join us at the end of the week where we'll wrap up all of these data sets for you. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.